Are the markets headed for a V-shaped recovery to all-time highs, or was all of this just a bear market rally and everything's about to roll over? Is Dixie, the dollar strength index, telling us that something major is about to happen? And where is Bitcoin headed next? In today's Market Meolysis, we're going to answer these questions and more. Join me as we cover technical analysis on SPY, QQQ, IWM, Bitcoin, and more. I am not a financial advisor, and nothing I say is financial advice. These are just my thoughts, opinions, and cats. Kicking things off with SPY on the 4-hour time frame, I think we have a lot of reasons to believe that this symmetrical triangle in purple that I've been sharing is actually in play. And QQQ is actually leading the way, and we'll get into its chart here in a minute. But SPY broke its resistance line here on April 22nd, pushed up to this key trend line in orange around 544 and rejected perfectly off of it. When we zoom out to the daily, we can see that that trend line in orange goes all the way back to July of 2023, so it's extremely significant. Price then pulled back to around 531.50, which is also a key level. Then it made a mad dash to break that main resistance line in green that started on February 21st. And it led to the major selling every single time that it was touched. And I'm not going to get overly political, but if you've been following the news or reports from unusual wells, you know just how much insider trading has been going on, with people loading up calls sometimes even minutes before the major headline is released. April 22nd after the bell was Tesla's earnings, and I don't believe it's just a coincidence that literally all on the same day we've got crappy Tesla earnings, but Elon comes out and says he's going down to only working for Doge up to 2 days a week and devoting a lot more time to running Tesla. Trump goes from berating too late Powell and calling him a loser to saying he has no plans of firing him. And then suddenly Trump is, quote, doing fine with China. Instead of this rising wedge here in yellow breaking down as expected, instead we got sideways bullish consolidation for a few days, and then we started to break down. We literally just kissed this old green resistance line and then confirmed it as new support. And if we throw up the RSI, you can even see how it was resetting, and then it broke resistance right here and then confirmed it as new support. And if anyone is confused why this larger rising wedge targeting roughly about a 30-point drop didn't play out, well, this is the first time since 2004 that the market closed green 9 days straight, something that is statistically very unlikely to occur. So when I call out setups, they are possibilities to watch for, but they're never 100% going to play out. So if this symmetrical triangle truly is in play, it's telling us that within just the next few weeks, SPY should see roughly about 602 as a conservative target. And if we were to take this measured move and move it up to the breakout from this green resistance line, then it could even be basically targeting the main red resistance line that we've covered so many times around 620. And I know that that sounds crazy, and we would absolutely have to get over the 200-day simple moving average and flip it into support, but this market legitimately keeps ignoring every bearish headline, including straight up high recession odds. Zooming in on the 2-hour time frame, however, on a shorter time frame, we can see a pretty clear rising wedge pattern here in purple with a measured breakdown target of roughly 17 to 18 points. And if we actually extend the upper resistance line of this other rising wedge pattern, here in yellow, we can also see that SPY could hit that line about 574 to 575 on Monday. And zooming back out on the 4-hour time frame, if we look left, we can see this minor bearish channel here in yellow that SPY was in back in January to mid-February. And if we extend that to the right, we can see how the lower support line of it will meet this extended resistance line right there around 578. So we have a lot of confluent reasons why SPY should meet heavy resistance very soon. And if that isn't enough, there's also a supply zone between about 576 to 582. And if we hop over on the daily and we throw up all of our indicators, we can see that the upper Bollinger Band here in light green on the daily will also be touching basically the 200-day simple moving average around 573. And it's going to be the first touch of resistance here on the Ichimoku cloud. And zooming further out on the weekly time frame, we can see that the weekly 50 simple moving average is around 568.20, which SPY just barely kissed on Friday and then rejected slightly. Zooming back in on the daily, I could see a scenario where we at least play out this mini falling wedge, which lo and behold would have us targeting the 50 daily simple moving average if SPY breaks down from about 573. And then get a bounce from there, or we may move sideways for a few days, maybe to see what Jay Powell will say on Wednesday. Then try to break the 200-day simple moving average. There's a possibility we even go back down to try to retest this orange trend line around 546 to grab more liquidity. And as bearish as I am, I can't ignore how much bullish structure we've built over the past few weeks. And I can't ignore the potential for this symmetrical triangle to play out. So all that said, if this is all truly was just a bear market rally, then yeah, we could start heading down sharply and likely break the recent low of 479.47, which occurred in extended hours. But in the short run, we are definitely in overbought condition up on the daily, as we can see on the RSI. If you're getting value out of my analysis, please like and share this video and subscribe with notifications so you won't miss these market moving insights. And while you're at it, please follow me on social, on StockTwits or X. And I share timely updates on there and on the YouTube community tab throughout the week, which might be something you don't want to miss. Hopping over to QQQ on the 4-hour, for those who say that my charts are cluttered, I have something I want to show you all. While doing my analysis, I decided to extend this resistance line of the symmetrical triangle that I was covering back in September 2024, and just look where it lines up. It literally would have called this recent bottom and was only off by a couple of points. And it actually would have been confluent with the lower support line of the bullish channel that I shared on SPY. We basically got the same structure setting up on QQQ as we do on SPY. QQQ broke its resistance line of its symmetrical triangle around 453 on April 22nd. It retested it around 450, which is also a very key level, on April 24th, confirming it as support, and then it was off to the races. If this symmetrical triangle fully plays out, a conservative target would be about 528 and possibly even about 536 to the upside. If that happens, it would actually place QQQ back into its very bullish channel in purple that goes back all the way to July of 2023, but it would have to get back above the previous support line of it between about 523 to 530, depending on where it got hit. And honestly, I think if this rally is going to completely stall out, that's where I would most expect it to happen, as I expect a ton of shorts to be there waiting. Just imagine we get back above the 200 daily simple moving average and everybody thinks we're bullish, and then you just hit this wall of sellers. QQQ's small rising wedge is targeting a drop of about 20 points, which would put it right back down into this area of liquidity. If we zoom out on the daily and we throw up our indicators, we can see how QQQ is very near to its upper Bollinger Band. It just touched its 200-day simple moving average at 491 on Friday, and it's getting into its upper cloud resistance. The 50-day simple moving average here in lavender is down at about 474.21 currently, and its small rising wedge would bring it right into that level if QQQ broke down from about 492. IWM also broke above its main green resistance line from February 21st. It broke out on April 28th, pulled back the next day and retested it around 193, looked like it was fully bullish, then broke down along with SPY and QQQ the next day, only to then rally along with them. And this ascending support line here in orange appears to keep holding it up every time that it gets hit, as we can see here around 180.80 and then again around 193.90. Zooming in on the 2-hour, strangely enough, IWM appears to currently be inside of a minor bullish channel here in yellow instead of a rising wedge. And if it does stay in this channel, it is targeting this supply zone up here highlighted in orange, which goes from about 209 to 215. Zooming back out on the 4-hour, I mentioned before that the pattern target for megaphone patterns is essentially undefined until you finally get a breakout. And if we take a measured move from where this bottomed to the upper resistance line, we get a measured move of roughly about 33 points, which could theoretically take us up to about 225.50 and near this supply zone shaded in green. Of course, it would have to break above this orange supply zone first and above the key level of roughly 211.50. On the daily, throwing up our indicators, IWM is touching its upper Bollinger Band here in light green. It peaked above its 50-day simple moving average around 198.80, and it managed to get above this key level of about 199.50 to 200. And as you can see, it still has room to run on the daily before hitting its Ichimoku cloud resistance around 207.50. Zooming further out on the weekly, I think it's also interesting to note that although IWM is above its 200-week simple moving average around 199 to 200, it's close to touching its 100-week simple moving average around 202.60, and its weekly baseline of Ichimoku is around 208.40, just below this previous strong demand zone in orange, which will now likely act as supply. And this could end up being an amazing shorting zone. Looking at Dixie, the dollar strength index, the inverted head and shoulders pattern that I shared is still in play. And as you can see, Dixie pulled back to retest the neckline here in purple. It wicked below, but it does appear to have confirmed this as support. And this is targeting roughly 102, which could place it at the upper resistance line of this old bearish channel in light blue that goes all the way back to January of 2025. And that would also have it filling the fair value gap from April 10th. Got to zoom out on the daily to even show you. But this whole green shaded area here from about 99.40 up to about 102 was also a previous demand zone, which could now be acting as supply. And I'm still wondering if we don't eventually see dollar strength come down and touch this main support line in green around 97. And considering that the whole market dropped alongside Dixie and started moving up along with it as well, which really makes me wonder if we'll see SPY and QQQ rally alongside with this inverted head and shoulders, and then dump if Dixie does decide to continue down again inside of this channel. And something we have to keep in mind is that if Dixie rallies, it will likely create headwinds for precious metals at a time when China is supposedly dumping a bunch of gold on the market and gold was already way overbought. And do you know what else seems to have an inverse relationship with the dollar strength? Bitcoin. So if Dixie starts rallying, there's the potential we also see Bitcoin start to drop. One thing to keep in mind when zoomed out on the monthly here, and this is extremely important. What if the Fed is forced to cut interest rates when Dixie is already near its main support line here in green, and it finally causes it to be broken after 14 years? In that event, we actually might see precious metals, especially gold, rally like crazy, and Bitcoin might also rally if the inverse relationship holds up. And I've heard the thesis before that Bitcoin was designed as a hedge to protect against the fall of fiat currencies, and frankly, if that's true, it could mean that Bitcoin is headed to ridiculous prices if the symmetrical triangle pattern that I've shared before fully plays out. Looking at the VIX on the 1 hour time frame, I've said it before and I'll say it again, I'm watching like a hawk to see what the VIX does once it touches this multi-year trend line in dark red between about 2150 to 22. Zoomed out on the weekly, if you're new to my channel, I just want to show you how far back this red resistance line actually goes, and just how significant it was that we actually broke above it. So if this holds up as support now, I'm expecting at minimum a sharp pullback on SPY and QQQ, and possibly even a reversal. When we zoom back in on the daily time frame and throw up our indicators, we can see how that multi-year trend line also lines up perfectly with the 100-day simple moving average here in blue, and it's getting right down into daily Ichimoku cloud support. Hopping over to the ADD, the market breadth indicator, I just have to show you how helpful this would have been over the past few weeks. So notice how into support and up into resistance, we kept forming these falling wedges, falling wedge, rising wedge. I want to show you what happened the following day for each of these. So on April 10th, the ADD formed a falling wedge. When we would look at SPY, what happened the following day? On the 11th, the whole market rose. On April 17th, the ADD formed a rising wedge. And when we hop over on SPY, we can see on the 17th, we were beginning to break down. And then by the following market day, the market had begun to sell off. On April 21st, we formed a falling wedge right down into support. And by April 22nd, the next day, the market was rallying. Then the very next day, April 22nd, we formed a small rising wedge into the end of the day. And look what happened on April 23rd. SPY began to sell off. Now, I think that's enough examples, but I want you to notice now what we're forming right up into resistance, and it's on a multi-day time frame. We've formed a rising wedge right up into resistance. Now, personally, based on the way that this looks, I think it looks like it could push up a little bit more before the overall market decides to roll over. And it's very important to remember that even when the ADD is going down, SPY and QQQ can be going up because big tech is so heavily weighted. But once those get overbought, it definitely puts shorts in your favor because then you basically have the entire market going down together. Hopping over to TLT on the 2-hour. In case you missed it, TLT has been trading inside of this minor bearish channel here in light blue. But now it's contending with this ascending support line here in purple, which goes back to the recent low on April 8th. If it can't break out of this channel, then it does risk going back down to about 86.80, where it could get a bounce. But if it breaks this bearish channel, it could continue to try to fulfill this symmetrical triangle pattern target of roughly about 92, as I shared in my last video. And I think bond investors are especially cautious right now with all of the political uncertainty, including the fact that a lot of US debt has to be refinanced soon at the same time that Japan is threatening to potentially dump US treasuries, and we might see China try to threaten that as well. All in all, I think long bonds are just a very risky play right now, and there are probably safer ways to make money. Looking at Bitcoin, I want you to keep everything that I say in light of this multi-month bearish rising wedge that we've been covering and its potential downside target. And I also want you to notice how we've got bearish divergence on the RSI, where the RSI makes a lower high, but price makes a higher high. Zooming in on the 4-hour, Bitcoin is well above its downtrend line from February 21st. And as I shared in my last video, it was forming this mini bearish rising wedge up into supply, which was targeting about a 3,300 point drop. But as you can see, yet again, the drop was minimal and it was invalidated by this double bottom. I also mentioned before that Bitcoin would have to flip roughly 96,500 into support if it wants to go higher, or else it risks breaking back down. And right now, it's basically just consolidating around that key level, so we'll have to see what happens next. And zooming out on the weekly, I stand by my statement that the highest Bitcoin will likely go before making a decent correction is the upper resistance line of this bullish channel in yellow around 100 to 101,000. But stranger things have happened. Taking a quick look at investing.com's economic calendar, there's a decent amount of reports that are coming out this week. And I think since the potential recession narrative is still at the forefront, some of these reports may hold a little bit more weight than they normally would, like the global services PMI and non-manufacturing PMI. But I think some of the big ones we're going to want to look at is on Tuesday, we have the 10-year note auction. So anything that's affecting the 10-year yield is extremely significant. And then on Wednesday, we've got the FOMC interest rate decision and the press conference where Jay Powell is going to be talking. And that should be a big market catalyst, I believe. With the recent economic numbers that have come out, the probability of a rate cut has actually been decreased. And then on Thursday, of course, we've got the weekly initial jobless claims and then also a 30-year bond auction. So this could affect things like TLT. And then last but not least, hopping over to Moomoo's earnings calendar. We've got some pretty important earnings coming out this week. Of note, on Monday, we've got Palantir after the bell. Then on Tuesday, we've got AMD coming out after the bell. On Wednesday, we've got Novo Nordisk, Disney, Uber, and ARM. That's going to be an important one. On Thursday, we've got Toyota, which is unlikely to have been affected by tariffs so far, but it could be important to know what their forward guidance is going to be. We've also got Shopify and Nintendo. And on Friday, there's nothing really significant coming out other than maybe Mitsubishi, which again, we would want to see what their forward guidance is in relation to tariffs. And I really love Moomoo for their earnings calendar and multiple features. I'm going to put my referral link in the description below, but if you'd like to sign up, they have a rewards program where if you sign up, and I believe if you put at least $100 in, we both get rewards, but check the terms and conditions. Stick around for today's trading rule to live by. Best of luck, cool cats, and God bless.